Hello and welcome to Solving Locally. My name is Tracey Bolton and I am the founder and CEO of Solving Locally. Solving Locally is committed to changing limiting perceptions of Africa. Today I am thrilled to welcome David Ogundeko, the founder and CEO of Funema. Funema is a VC firm reimagining venture capital for Africa. Hello, David, and welcome to Solving Locally.
It's good to be here, Tracey.
David, I am so excited to learn about the VC space in Africa and how Funema is changing the game to work for Africa. But before we start, please share a bit about yourself and your journey to creating Funema.
My journey has been a very interesting journey. I'm not I didn't have a traditional venture capital trajectory. In fact, I thought I was going to be a poet and a writer all my life, and that this is like 20 plus years ago. But I guess I had a really different trajectory. I stumbled into private equity, actually. I was the IT technician of a PE firm back in Lagos. I stumbled into venture capital as well. There was an opportunity at C-Stars back in Lagos, Nigeria. And C-Stars is a Swiss-based venture capital firm. They're in over 60 plus emerging markets. It's one of the quiet giants. I would call them like an European version of Techstars, if you will. And I got into C-Stars in 2016, and I was one of their local MDs when they started the Lagos office. And I was in charge of managing the talent, the academy that would source hire and then mentor the talents for the venture studio. At the time, they had about 3 different investment, I would say, vehicles, but one of them was a venture studio where they would take ideas and incubate those ideas in the studio, and they'll find founders, young entrepreneurs, and they will train and mentor and have them build out the ventures. Very brilliant concept. And that's how I got into venture building, actually. And I saw how powerful venture building could really be in taking ideas from concept stage and paper, building out the prototypes, going out to test very rapidly, and then, of course, generating revenue in a matter of weeks. And to me, that was phenomenal, because this is way back in 2016. I guess what then led me to start Funema, which is hence my origin story, is that I saw that VC is designed in a way that can only work where you have scalability. And it takes a lot to bring scale. And I could say that what was lacking was a systems problem, or rather the right systems to enable scale, and that led me to start Funema. So I would pause there now, but that's really my background. I'm currently building Funema in Cape Town, South Africa. We're based in Nigeria, we're based in South Africa, and we're also based in the US as well. I work out of the African office, and my partner works out of the US office.
Wow, David, that was definitely not the traditional finance path to venture capital, and I think that's great. I love that your journey was more organic. I really love that. And it just speaks to the old adage that necessity is the mother of invention. This really resonates with me because, as you pointed out, venture capital investors are really looking for companies that are ready to scale, that have already figured it out. They have that consistent revenue stream. They have that solid customer base. And I love the fact that you, with Funema, said, wait, this model does not work for our founders. Let's reimagine something that works for our African founders, that meets our needs. I think that is spot on, and I'm so impressed with that. I just want to tell you, it is just so refreshing to meet venture capitalists where profit is not the only driver. From what I know about private equity and venture capital, profit is the primary and more often than not the only driver in making deals or investing in companies. And so it's really refreshing to meet you and understand that profit isn't the only thing. And I'm using the word profit when I could use another word. I'm being very polite, but I think it's just wonderful that you recognize that profit is short term. It's not the only driver.
I guess what I've come to realize is, and I've had a bit of unlearning to do in the past. Profit is a natural cause, but you can't have the cat before the horse. It's not possible. You need to have the horse before the cart. And I think that's what we're failing to get right here. I see a lot of copy and paste models on the African continent that it's just not going to work. It's just not going to work. So the way we approach private equity Funema and venture capital, and then of course leading to your question now, is that we've sort of seen that what we lack is the right, I would say, system that can enable scale. Because when you've got scale, you've got profit at scale as well. And we're looking at alpha kind of returns, alpha level returns. But if we only chase the alpha returns today, then it's not sustainable. We are basically just replicating the extractive, history that we've had so far from. Well, let's not go that deep. It's not a history lesson, but we're just going to keep replicating the same extractive history where we're just seeking opportunities to just exploit and then we leave, as opposed to really building generational opportunities that can create lasting wealth for decades to come.
David, my next question I have for you, and you've touched on it a bit, but can you succinctly tell us what is the mission of Funema?
So our mission, because the reason why I left SeedStars and I started Funema in 2017 is that, number one, I saw that founders who were trying to solve real problems were not really getting any support, because real problems had infrastructural challenges, and these founders had to build their own infrastructure in many ways. And that means that they cannot have a pure asset-light business model. It's got to be some sort of hybrid to an extent, hard assets, and then it's software of some sort, and then data and everything, but it can't be pure. It can be purely light, and that's a challenge, because that already will get them a very strong resounding no from a VC if they approach a VC firm for investment. So we decided to design a model that can enable these founders get the traction that they needed to prove their business case, that this may not be exactly asset light, but it doesn't mean that there's no opportunity here for any venture fund. And we had to think outside of the box, because to raise a fund to finance that will be almost impossible. What we saw 9 years ago is that a lot of the investments that have been made were going into cosmetic problems or cosmetic solutions that will not solve the systemic issues. And it means that maybe 5 years there might be an acquisition, the fund might potentially exit their investment, but the challenges that were there before the investment was made are still there. And I believe strongly that capital needs to have the right agenda. Yes, you need to make returns, but at what cost? If it's not really solving problems locally and in many ways compounding the issues, then it's not capital. It's just something that's entirely different. So, because what I'm hoping to see, maybe, I don't know, half a century from today, is that we can have enough small businesses flourishing locally in communities that are not necessarily, I would say, upper class. Because that's where you have the massive population living in other ways, and be able to get jobs locally and decent income, and then access to decent lifestyle. That's what I'm able to see 50 years down the line. I may not live to see it, but that's the mission that I'm on.
Thank you, David. I love your mission. I think it is the appropriate mission for Africa at this time. And I like to say, which I think is what you've alluded to, is profit without impact is temporary. I think your model, Funema's model of venture capital is one that can be replicated in other parts of the world, specifically in the United States. Because even though what you said about infrastructure is true in the US, if you look at who gets funded, it's not folks that look like me. So I think there really is a need to reimagine what VC looks like here in the US. And I think that the challenges that are faced by entrepreneurs in Africa are challenges faced globally by entrepreneurs who historically have not had access to VCs, have not had access to the expertise in preparing for a pitch, preparing for the deck. All the things that you and Funema are providing to get your founders and entrepreneurs in a state of readiness for capital infusion. So I really think you're hitting a need that can be leveraged in other parts of the world for sure. David, tell me a bit about your current portfolio. What type of companies do you have in your portfolio? What is your criteria for working with companies? Tell us a bit about that portfolio.
Very high level, broad strokes. We've got about 20 plus companies in the portfolio. In terms of numbers, our portfolio is valued currently at over $100 million. And these are still early stage ventures. Over 80% of them were companies that, actually over 60% of them were companies that we engaged right at the idea stage, pre-revenue, pre-traction. The rest came because they could see the value that we were providing the founders in the portfolio. And at the moment, we're concentrated in just two countries. That's Nigeria and South Africa. Nigeria has about 70% of the entire portfolio. And that's one of the reasons why I'm here in South Africa, which is to build a local portfolio and a local brand here in South Africa. So we've got a thesis, a thematic investment thesis, and it's that we're looking for companies that are building, B2B solutions or tech-enabled B2B solutions that can enable small businesses locally to achieve 3 levels of successive growth. Okay. And we look for companies that are building solutions, but then it's in any sector. We're not, focused on one sector because we believe that small businesses can be found in pretty much any sector, and they can leverage these solutions to be successful. So that's how we find companies. And we've got remarkable companies like Duka, which is building an operating system for merchants across the continent. We've got Check It app that is providing a blockchain-enabled infrastructure that is helping OEMs to fight against counterfeit products locally in the market, which is a major problem in many African markets. Easy access to fake products, either pharmaceutical products or FMCG brands. We believe in the future, these technology can also enable local manufacturers, locally owned brands to be able to create and sell and still make revenue without worrying about counterfeit.
What an interesting company to be able to detect counterfeiting as it relates to products. I know I've met some entrepreneurs on the continent that have similar apps, they're mobile apps, where folks can detect if a drug, a prescription drug, is counterfeit or not. And that's been a huge win for certain countries on the continent to ensure the integrity of drugs using this app. So, wow. Very impressed with your client listing. I'd like to give our audience a sense of the investment landscape on the continent of Africa, understanding that Africa is just that. It is a continent of 54 diverse countries. So I want to ask, what would you like to share with our investor audience thinking about coming to invest in the continent, to give them an overview of the investment landscape on the continent, things that you view as investment opportunities across verticals or in specific countries or industries?
Africa is also not like Europe because you have It's almost like America. You've got North America, you've got South America. But now imagine you have that in 4 different regions, because North Africa is not the same as West Africa, completely different culturally. We happen to share a massive land and also some similarities in values, but really broad strokes, cultural difference, very, very big. And also West Africa is not the same as East Africa, and East Africa is not the same as Southern Africa. In fact, the major reason why I'm even here in South Africa is because I realized 3 years into starting Funema that I needed to be here. Just to understand the dynamics, because we don't speak the same language. And when I say language, I mean that from a values perspective. Yes, we might have some cultural similarities from a historical perspective, but we've all evolved differently, we've all grown differently over the centuries. So we don't really share the same. It's not easy to take a business model in Nigeria, for example, and then bring it to Africa and expect that it would naturally be taken and adopted. It really doesn't work. So I would advise that investors should do their homework and really see these as a culturally rich continent. Every country has its own, I would say, unique perspective. Taking a single heuristic approach would be very, very flawed. What we've seen is that when we find the right founders who are deeply aligned with the mission, they tend to stay longer. And now we're thinking of, we could make this a solution to our investors. We're building a network of venture builders across the continent. We want to train over 1 million venture builders that will be embedded across the entire continent. And then these builders can be embedded in the local economic systems, and they can provide, real in-depth insights on what's trending, what should be the right investment opportunities, and what investors can engage with, can deploy capital into. And then in terms of opportunities around growth, so I have to say that AI is changing the landscape.
Yeah. Is there anything that AI is not touching?
It's touching everything. It's like the internet all over again. And I'll tell you why. Because the global south is at a very big disadvantage, and that's just the honest truth. Yeah. And so far, what we've had is more like a cosmetic fixes here and there. We cannot proudly say that we have, foundation models that are built locally in Africa and we own it. We don't really have that, and to be able to do that, we need to have the infrastructure to do that. And we need the right energy source, really. And I just recently learned that it takes, to build a gigabyte power station, it's cost billions of dollars just to get that done. And we're also struggling with energy in Africa. So I think that I would say that the traditional business model, it's probably what they should be looking at investing in, energy plants that can provide steady power supply, but also enable the continent to play in the AI race as well. They should look for energy projects, first and foremost, because without that, we don't even own our own internet rails. The browsers are not owned locally. We don't own any internet browser that is designed locally in Africa. We don't own the infrastructure such as Gmail or Microsoft or the software tools that we use on a daily basis to engage and to do business online. We don't own LinkedIn. We don't own Yahoo. We don't own any of this. And with the way the world is going, we've already seen that the trade that has held the world together, the barriers are already. I mean, it's just that bond is not there anymore. So we have to start thinking about, how can we have our own data and technological sovereignty in Africa?
I agree. It's IP, it's intellectual property, because at the end of the day, you have to own it to secure it. So, David, what I understood about the investment landscape, again, it's diverse. So investors, think about what countries that you would like to engage with, learn about those countries, build relationships in those countries, and go on the ground in those countries and learn about your market. Second thing, energy. huge investment opportunity in the traditional energy spaces, power plants across the continent, and also AI initiatives to enable Africa to really grow and develop in the AI space. Thank you for that. David, I want to talk a little bit about the African Free Trade Area, which is the largest free trade area in the world currently. And I'm super excited about it because I really believe that intercontinental trade is a huge enabler for prosperity across the continent, for countries to be able to transact and trade with one another. I think will be a seismic shift, to be honest with you. So I really want to get your thoughts from a VC perspective on your views around that and what that will mean for founders and for investments across the continent.
Yeah, thank you. I would say that I'm really happy that, it's about time that happens because we've been isolated for far too long. We've been divided. And I believe that this is going to bring the continent back together. There's going to be some really strong integration. But if we can trade easily, if we can have a local benchmark for currency conversion, as opposed to using the dollar, which can be very problematic because every country has its own currency and their currencies, exchange with dollar at different rates. So that already makes trades almost fall flat. So if we can have that, it means that local startups can start accessing a globally local market beyond just their own country. So I would say that investors, now is the time that they need to come and be more integrated and be more in the know. I do believe that this would open up the tech space dramatically. And if we have these local currency and we don't have to use dollar as a benchmark all the time, it means that we can start having local exits as well on the African continent. But now if we have a stronger economy, we've got a stronger integration between the countries, and we can have a stable benchmark, which is not the US dollar, then it means that they can keep their wealth locally as opposed to hedge against local currency volatility risks. And that means that they can then invest locally, and we'll have strong investment players, which can also mean that when the FDI comes in, because it's quite funny, money will always follow money. At the moment, Africa, I think, accesses less than 1% of total private equity.
It is. You're right.
If we can even start and I believe that after we will really incentivize local investors to play more locally, and that will then attract capital, more like a dollar for dollar kind of transactions or partnerships. And I'm actually looking forward to that.
David, you touched on one thing that I want to piggyback on, and that is investment by African investors. And I think there's a huge opportunity beyond just African investors, but also investors from the African diaspora. I think that is a huge opportunity, and that is one of the goals of Solving Locally, is to build that awareness of investment opportunities to the African diaspora. I'm thinking of folks like, Oprah, Melody Hobson, Kevin Hart, Lewis Hamilton, right? And I think the Africa Free Trade Area makes it a more attractive investment opportunity because of the trade potential. So super excited there again on the Africa Free Trade Area. David, this has been such a great conversation. I want to close us out with your thoughts about Africa in 2050, your predictions. The data suggests that by 2050, 1 in 4 people on the planet will be African. The world is becoming African. Like it, love it, or not, it is what it is. So what are your thoughts about Africa, your hopes, your predictions for Africa in 2050?
I see a continent that would have a lot of its children outside of the continent coming back home. And that's what I see. And I do believe, I do believe that the governments are making good strides forward. We've seen a lot of changes, even in Nigeria. I've seen they're making the right policies that would enable local trade and the advancement of technology. And recently, AFDB released an RFP for venture studios, by the way, that can provide solutions in developing deep tech business models or deep tech startups. And that already shows you where they're thinking, because so far we haven't had a lot of deep tech investments locally in Africa. So 10 years down the line, and that this can enable the creation of local IP that can start moving content forward from a scientific, scientiological advantage. So I think that in the next 10, 15 years, I am hoping as much as I think it will, but I'm also hoping as well, because I got to push it forward with a bit of prayer. But we will have some unlocking of economic prosperity, to at least to an extent, that we can have the same trajectory as Malaysia and Singapore and of course, China. So 2050 is going to be an exciting period. I see more local stock exchanges becoming more active. And it means that we can have more retail investors invested, we can have more IPOs of homegrown African companies here on the African continent, IPOing in the stock exchanges of their own countries.
David, I hope your predictions, your hopes for 2050 come true. My hopes, my thoughts for 2050. I think the data is pointing the way. By 2050, 1 in 4 folks on the planet will be Africa. All the natural resources are there. The youngest population on the planet is in Africa. So the data is there. All roads are pointing to Africa. You already see players there on the continent. When I travel, the Chinese are there in full force, other Asian countries. I see South America to a lesser extent. Of course, Europe is there, given the history and the relationship. Americans are late to the party, but I think by 2050, it will be obvious. The data will lead to Africa. It cannot be ignored, or ignore at your own peril. Thank you, David, for sharing this time, your expertise, your insights with Solving Locally. Love the work that you're doing with Funema, reimagining the venture capital space for Africa. Thank you.
Yeah, thank you for this opportunity.